We're getting to an incredibly interesting by the dip moment, but hopefully you can understand that nothing happening here is out of the ordinary apart from the peak fear narrative. Sentiment is wildly overdone here. And don't forget, coming out of we're going to tariff everybody a gazillion percent will be the walk back, the discussions, the negotiations, the agreements, and all of that will take uncertainty out of the market. So on a forward-looking basis, ignore all the work that we've just done. Is there likely to be less uncertainty or more uncertainty in a month's time? It is almost 100% likely to be less uncertainty. Markets hate uncertainty more than anything else. They overshoot when they're trying to price uncertainty, and then they'll price in the outcomes.
From macroeconomic trends to short-term price swings, markets are heading into what could be a major opportunity zone. Fear is dominating sentiment, distorting reality and leaving assets severely mispriced. While headlines scream panic, history reminds us this is when the smart money moves in. According to Raoul Pal, CEO of Real Vision, this current market chaos is typical of cycle bottoms, where emotion overtakes fundamentals and sets the stage for a turnaround. Pal explains that markets hate uncertainty more than bad news itself. Rhetoric like aggressive tariffs often gives way to more measured negotiations, reducing long-term risk. When that happens, investors begin to buy the fear instead of running from it. The key moment? When panic peaks, that's usually when opportunity is greatest. Those who recognize the emotional extremes are often the ones positioned for the next rally. Right now, Pal believes markets are on the verge of flipping into what he calls beast mode. Fear has maxed out, and that extreme sentiment is setting the stage for a tradable bottom. As mismatched prices hit the market, major plays are being set up for those bold enough to act. It's not just a recovery, it could be one of the wildest rides we've seen in years. Let's dive into clips from Raoul Pal's latest market update. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.
Right. So, Julien, what does this start to mean for markets? Because markets are getting utterly terrified and are creating inflation narratives, recession narratives, broken business cycle narratives. What is the markets telling us right now?
Sentiment and positioning.
Maybe I've seen this deck before. Maybe I know.
I think you have seen this deck before. Well, let me talk about that. So if we talk, first of all, let's just go back to the chart I posted on X. I'm not going to skip all the way back up, but you guys will have access to this deck. But essentially, if we look at the 3-month rate of change versus either the NASDAQ, the S&P 500, or Bitcoin prices over against our financial conditions index, which is obviously advanced and inverted, we've priced in all of the Q4 tightening in financial conditions, and now financial conditions are easing. So the expectation here is that now that markets, if we look at this, are extremely oversold. So if we look at the S&P 500, the percentage of stocks trading with a 14-day RSI below 30 being oversold is at almost 50%. And by the way, the markets, well, I don't have my Bloomberg open, but at the time we were recording this, the market was rallying back, but this does not take into account today's move, whatever that is. Okay, this is yesterday, or this will be Friday's close. So we saw, a move up to 50%, which is the most since Q4 of 2022 when Raoul and I were writing that article, The Turn is Near. And before that, COVID, like when the economy, the entire world economy shut down. Then you look at the NASDAQ and you're like, oh, right, highest since COVID. Okay. A very different environment, obviously. And then if we just look at a series of other measures, if we look at the percentage of stocks trading above the 50-day moving average, oversold, 200-day moving average, oversold. This is the NASDAQ. If we look at the S&P 500, the percentages of members with new 50-week lows at nearly 30%, Q4 of 2022. Same thing with the NASDAQ. And then when we talk about investor sentiment, back in early March, the AAII survey showed a surge to 60% of investors surveying that they were bearish. And that's only happened 5 other times, looking back to survey inception back in 1987 or so. And then if we just look at what happened last week on prices moving lower again, we saw a spike to 62%, which means that investors, according to this survey, are as bearish as they were in March of 2009, or that was the last time we saw a push above or to 62%. And by the way, so that was the global financial crisis. Excuse me. And March 2009 was the low for the market. And then if we look at the Conference Board survey, so 44.5% of consumers currently expect the stock prices to decline over the next 12 months. And that's the highest since July of 2022 and before that, October 2011. So the point here, and I'm going to show you a couple more of these, if you don't think that we're heading for a 2008 style entrenched global recession, which is not our view, these are incredible data points to take a more contrarian
Don't forget,
view.
the 2008, what was different is that was a collateral crisis. That was before QE was used to stop collateral falling in value. So that was a full-on debt deflation that was stopped via the printing of money, the debasement of currency, which lowers the value of the denominator and optically makes assets rise. Once you do that, you stop the risk of a collateral crisis, which stops a debt crisis. You pay for it via debasement of currency, but it's a slower mechanism than losing 75% of the value of stocks.
And then when we look at Bitcoin, so I think this is a great chart. This is Bitcoin, and then it's 14-day RSI. And what I had been saying at MIT from really, I don't know, when did this trigger? What was that? Last month? 2 months ago? No, a month ago, when we fell below 30, is that it's not unusual if you look back at the previous 3 times Bitcoin triggered an oversold reading to base. And this base can take time. And you know, in both the 2022 instance and the 2023 instance and the 2024 instance, we made lower lows. And if we look at intraday pricing overnight, we made a slight lower low versus the lower low which occurred, the low which occurred last month. But again, I believe we're in the process of this basing. So the kind of this accumulation phase. And then if we look at the last 3 times, so that would be the teal line, so the average price trajectory following the last 3 Bitcoin RSI oversold readings. And again, oversold means below 30. This is the current trajectory versus the future trajectory. So what you can see is I'm looking back 2 months and then forward 4 months. If we just look at when things start to pick up, it's really a month and a half after the original oversold reading is triggered. So these bases take time. And so
the chop that we're seeing phase is very strong.
That's right. And so what's been frustrating over this phase is the chop. And I can see all over Twitter, and we've talked about this before, people are like, oh, well, Bitcoin's down another 2%. No, or it's down another whatever. It's not. It's just been doing this. And so, it's been going up, whatever, 10%, and down 10%. But we made a new low intraday last night, which we've already recovered. But the point is normal for alts,
and it's normal for alts to bleed in that environment, generally because there's more issuance of alts, and generally as people pull in from the risk curve, alts come lower, but they come back faster, which is that alt season chart we talked about before. I know nobody believes in it now. There's too many altcoins. It's all fucked. It's only Bitcoin dominance forever. It will most likely, probabilistically speaking, play out like it's always played out, which is as the ISM rallies through 50, this recovers. What happens is alts outperform.
Markets are drowning in fear, panic over inflation, recession alarms, and broken cycle narratives dominate the headlines. But history tells a different story. This is often when the biggest opportunities emerge. The S&P 500 and Nasdaq are now more oversold than they've been since COVID. Bitcoin is flashing signs of a classic bottom, and sentiment surveys show record levels of bearishness. This isn't 2008, it's a sentiment crash, not a systemic one. When the fog of uncertainty lifts, the rebound could be violent. Right now, the crowd is bracing for catastrophe, but the smart money knows that peak fear often marks the turning point. Bitcoin's recent drop? We've seen this movie before. Since 2022, there have been 7 similar plunges, each followed by strong recoveries. In 2017, we saw 40% corrections before a 23x bull run. With financial conditions easing and global liquidity rising, this looks like textbook bull market turbulence, not the end. The setup couldn't be clearer. Technicals are bottoming out, and a V-shaped recovery is on the horizon. This isn't a collapse, it's the calm before the next massive surge. Let's roll into more clips from the interview.
So the question you're all here for is the banana zone canceled? The answer is, in our view, no. First of all, just to piggyback on what Raoul said in the beginning within the don't up checklist, we have seen over the last 2.5 years, 7, 20 to 30% pullbacks in Bitcoin. And while you're feeling this current one, because we're still in it at the moment, you probably don't remember any of the other ones that we saw because off the low point, Bitcoin, even with prices coming lower.
Apart from the other 30% one, which was that September one, which
that final flush.
Yeah, people remember that, like they'll remember this, but the rest, I can't remember any of them.
Yeah, I don't either. I just remember it being what we were calling at the time the boring zone. I was just waiting. It felt so long. But again, even with prices coming down, over the course of Q1, we're still up 400% off the low. So you don't remember these things once they come to pass.
And also what's interesting about that chart is, okay, so the correction is in line with expectations. Then again, you've got the big picture macro, the business cycle, the liquidity analysis, the sentiment analysis, and the technical analysis, all telling you that maybe everybody is over-fearing and that the upside projections are the probabilities are for upside as opposed to downside.
Well, and as I had pointed out within the business cycle section, Bitcoin's already priced in an ISM of around 47, okay? And if that's right, based on the move that we've just seen, but as we've been highlighting, financial conditions are now easing, which means that over the next 3 months, the data should start to improve. So it's fairly unlikely that we get to 47. And so anything that comes out next month, as I showed you that kind of new orders chart, should start to move higher over the next 1 to 2 months. That's not at all in the price right now, given what we're seeing. And then when we look at the 2017 cycle, so the cycle that Raoul and I feel based on our views around the dollar and liquidity turning higher, we saw 2 30% corrections, 1 35% correction, and 2 40% corrections over the course of that year, right?
And also with that is the cycle didn't get going because we had the same tightening of financial conditions in Q4 2016.
Yep.
The cycle didn't actually get going till the end of April, and then it accelerated. And again, it's very similar to us is where we are today.
Well, kind of more the end of March, right?
Yeah.
So more where we are now, actually.
Yeah, true.
So it didn't really pick up until the end of March, which again looks a lot like today. But then if you just zoom out once again, over the course of that year, so Trump victory in November, in January, on the 4th of January, we saw that sharp, harsh, what was it? I'm just going to skip up. Was it
35%, I think?
Yeah, 35% drawdown. But then off that low point, over the course of that year, despite the 5 or so corrections I just mentioned, 2 of which were 40%, Bitcoin went on to 23x that year. And no, I say this all the time, we're not expecting 23x. What I'm just trying to set for you is the framework for understanding, where we are and why we still think the best is to come. And speaking of that, again, one of the charts that Raoul and I had originally published, which now is all over everywhere, we've pretty much closed the gap with global M2 using the more correct 12-week lead time.
I think the 10 weeks looks just as good. Either way, it's
basically one of the two.
A wall of upside to come.
Yeah. And so what this would suggest, if we're right here and everything that we just outlined, is that Bitcoin should be putting in new all-time highs, or at least hovering around all-time highs by the end of June. And the same is true for the NASDAQ, which has grossly undershot global M2. And what did you call this? Excess fear?
Yeah, it's like this is the market pricing excess fear. This is the VIX going to 60. We didn't have the same in crypto. This has been driven by equities because obviously you don't tariff cryptocurrencies, but you tariff equities, and the market is struggling to price this in. But again, once China's deal is agreed, and the ugliness of the negotiation, let's see how that goes. But once that is agreed, there is a big gap versus what liquidity is doing, and we will have a very fast snapback, I think.
Yeah, I totally agree. I think it'll be, once we get the DMARC count stacking up, I think it's going to be a pretty V-shaped move.
Yeah, and that comes next week. By Wednesday, if it continues to count as it does, and then next week should confirm a weekly line as well. So again, it is, opportunistically speaking, incredible time.
Bitcoin holders are feeling the heat after President Donald Trump's latest tariff announcement sent shockwaves through global markets, including crypto. But while some are panicking, others see opportunity. BitMEX co-founder Arthur Hayes is one of them. As Bitcoin dips around the $75,000 mark, Hayes is buying aggressively, calling it a discount too good to ignore. He's even predicting Bitcoin dominance could surge from 60.5% to 70% as altcoins lag behind. While Hayes leans in, many traders are staying cautious, wondering if the market has been oversold. Yet not everyone is spooked. Cathie Wood of ARK Invest remains firmly bullish on Bitcoin's long-term trajectory. And Raoul Pal, CEO of Real Vision, is calling this fear-fueled dip exactly what it is, a setup for a powerful rebound. Pal points out that markets often overreact during moments of panic, but once the dust settles, they snap back fast. Extreme fear doesn't last forever, and it often signals the best buying windows for those bold enough to act. In the bigger picture, Bitcoin continues to strengthen its case as digital gold, a hedge against uncertainty and a store of value with serious long-term potential. So the question is, how should investors navigate the short-term turbulence in Bitcoin and crypto? Drop your thoughts in the comments below, we'd love to hear your take. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.